Good morning and welcome to Trading with Larry. I'm joined today by Eric Shamalov in Brooklyn, New York. I'm operating out of South Florida. Glad to be with you. People that are just joining us for the first time, I want to just give you a little quick 2-second background. I've been in the business 40 years. I started trading on the trading floors and I learned options from the ground up about 40 years ago. And I worked for a company called Spear Leeds and Kellogg for 11 years and ran their hedge book and their index derivatives area. And I have extensive knowledge across the board in macro, U.S. equities, along with thematic macro. And in 2000, I started a hedge fund called Banyan Equity Management and ran that for 12 or 13 years. And I've spun it into the opportunistic trader where I give insight, thoughts, ideas, education, and information to the public. And, I'm very happy to do it. And I'm happy to join everyone today. And I'll throw it to Eric. He can give a little bit of a quick background. I know he looks really young, but he's got a ton of experience. So I'm going to throw it to Eric. He can go over, where his expertise is.
I appreciate that, Larry. Always good to be called young, or that you look young. But I started out in commodities at a family office in New York. Spent about 3 years trading commodities, and like Larry, got into macro. Built a quant macro desk at another New York hedge fund, and spent 5 years doing that. Commodities, just cross asset, everything. Um, and then I joined Larry about 3 years ago, and very happy to help him build the brand.
Oh, well, thanks, Eric. And, I think it's important for people to understand just macro in general. So, originally, when I started on the floor and I was just trading equity stocks and options on stocks. And then it branded out to learning how to trade pretty much everything: commodities, stock index futures, bonds, currencies. So by having that, I feel like our arsenal is we have the ability to be opportunistic and go where the action is, and utilize our skills, our disciplines in pretty much any market in the world. So that's the beauty of macro. I like to keep it defined. I know, I always talk about this for people that watch me. I don't want to have like 25 positions on. I want to have on concentrated 4 or 5 positions on, um, expressing my views, and then options around that. I think it's the smarter way to go here. A lot of managers have so many positions, and when things go wrong, it's really hard to manage those positions when everything is not working. So I like to be a little bit more concentrated, define risk strategies, and make money that way. But I want to sort of swing it into talking about the markets, because that's what we do every day, get everybody ready for the trading day. And it's the Thursday before a Friday unemployment. Big number. Used to be, I think, a bigger number. There were employment numbers 2 years ago coming out of the 2022 bear market that we were moving up and down over 2%, 1.5, 2% on that number. And now we're talking about the lowest price movement that we've seen in a really long time. And really, if you look at today, which is what we really want to attack, inherent volatility or implied volatility for the day is under 10, which is something you rarely see. And the straddle for today, which I priced before we got on the air, is the straddle we look at, we may or may not trade that or on that, but it always gives you, it's something that you want to look at to see what the market players are, wagering, that the market is going to move. So they're wagering against a 25-point S&P move, which is really very little, for today. So I think we're going to probably sit around and wait until tomorrow. And tomorrow's number, in my mind, may be a little bit bigger than what people are thinking. And here's the thing: I don't know if you were on when I said, it was very funny. I said, if I was Clarence Beeks and I had the crop report or I had the unemployment number, I wouldn't even know what to do with it. So if you had the number right now, you don't even know how the market's going to react. Are they going to react positively to a weak number, or are they going to react negatively to a weak number, or vice versa with a strong number? So I don't think people know. I think a weak number could be construed as negative, but I just think it's kind of a throwaway. So I don't know, like, if you have thoughts on this, like what's going to be the reaction on a weak number? I think lower, but I'm not 100% sure, and I think it should go higher on a stronger number, but it may not act that way. And that's, something usually I come on and, as people who watch know, I'm very opinionated on thoughts off of numbers and, different things that are thrown at the market. But right now, I'm going to have to wait, I think, for a market reaction to really make a move. And, Vol just keeps ticking down. So I'm not really sure. So I don't know if you have thoughts on, the unemployment number in general.
Yeah.
What do you think?
Well, I think you're missing two scenarios. One of them would be go higher on a weaker number or go higher on a stronger number, meaning irrespective of what the jobs number says it could go up, or irrespective of what it says it could go down. I think momentum has taken hold here.
Oh, time out. Let me just say this for the audience. Whatever you just said did not help anything. Okay. If the
well,
market is strong, it could go up or down. If the market is weak, it could go up or down. Okay.
my
Yeah, I
general
guess you're not
feeling,
helping me out here, son. We're in the same spot. Okay. That's what
oh
I'm
boy,
saying. Okay. So,
my my general thought on these economic indicators is most of the time, I'd say like 99% of the time, they're so priced in, it doesn't matter. I think it's more fuel for the headline writers after the fact.
well,
So I don't know. They'll spin it. They'll spin it either way. We saw an ADP number come in way below estimates yesterday, and the market just didn't care. And that that number's going to come out tomorrow.
right, but
They'll talk about it for
maybe
2 hours on Monday. They'll forget about
But maybe that's what they're thinking. Maybe the market will go up on a weaker number. That's maybe what the market is thinking. And, the one little giveaway here is bonds were trading at 450 when this whole thing got started. Now we're 430, which, in the world of bonds is not a huge move, but it's definitely a little bit of a directional move here down to maybe 4.25. The only thing is, I don't think bonds have anywhere to go but lower and rates higher, because you have no international buyers of bonds. You have massive debt finance here, and people are not going to want to finance that debt on the cheap and get burned. So you're looking at countries like this morning. The ECB cut rates again. They're down to 2%. Okay, there's a big dispersion between what's going on pretty much in Europe and across the globe and what's going on with us. So I don't know if Powell is overly cautious and is going to miss the ball again, because he usually does, um, and stay tighter for too long, or is it going to be that the guy is actually correct today, or in general in the market now, and we're going to see whiffs of inflation, with slower growth, which is the word that we were talking about a while ago that no one's talking about, but it's like stagflation, where you have no growth and inflation. We're not seeing the inflation part yet, but I do believe we will. So I think maybe he's, worried about that, but I'm not exactly sure because to me, what is apparent is slower growth. I see slower growth right now, and I see job contraction. I don't know if it's going to show in the number tomorrow. It should. I mean, we're having. I saw like a layoffs number that came out that was like there's 40% more layoffs this year than there were last year. So I think you're going to see this jobs number be very, very flat. Um, but again, you never know because it may not bleed into this, monthly number. It might come next month. And we said that the month before when ADP and Jolts were weaker. We thought that last month, for the month of May, that we were going to get a weak jobs number, and we never did. The jobs number was actually strong. And the market held up either way. So right now, we're waiting on this number. I think it's not going to be a big deal. Obviously, the market is pricing in it's not going to be a big deal. And now the question is, where's the market going? We're at 6,000 for all intents and purposes. We were at 4830 on the S&P in April. The all-time high is 62, so we're pretty much 3.5% away from an all-time high. So, I say if we're going higher, let's get it out of the way and let's do it. Rather than just sit here.
That's so funny. I had the same thought yesterday. I'm like, just take it to 6,000 already, get it over with.
I know it's like it's a grinder, but it's interesting. It felt different the last time. We've been here before. Like if you pull up a chart, we were here probably 3 weeks ago. And then we failed off that. Then we had some negative news that the market was actually perceiving as negative for a minute. And then we went down to 5,800, which these are not big moves compared to what we had. And then we bounced back slowly to where we are. But like looking at the market this morning, the high low range on the S&P is less than 20. It's 25 points from high to low. And the market has done pretty much what it's done, 4 out of the last 5 days, where it's down overnight and then it rallies in the morning. It's done that 4 out of the last 5 days, yesterday being the only day that it didn't. So, I mean, today I think is quiet. Volumes, again, we talk about this, are very, very low. And you gotta trade with the cards you're dealt. And right now the cards we're dealt is you called me last night and you said you got a headache from watching the market do nothing all day. So you might get a headache again today because there's not a lot going on. There's not a lot going on. Um, the one market that we've talked a lot about that we kind of have been picking up is the weak dollar. The weak dollar continues today. We got the British pound at 136, high ends of the range, and the euro at 114.43. And tomorrow, if the number probably comes in weak, this thing will assault the high of the move, which was basically 115 intraday on a blip. So, dollars at weak levels. Do you have a dollar index chart, or can you pull
Yeah,
one?
we could pull that up.
Yeah, it'd be interesting to see. Because I know we blipped up there when we were making the low off of the original tariffs, and it will be interesting. Yeah, I mean,
This is the S&P. Hold on.
I'm like that doesn't look like it.
Here we go. This is the dollar.
Oh, my face is in the window. I can't see it.
There it is.
Oh yeah, yeah. So, but you got to go back on the. Yeah, so we're basically on the lows, right? So,
we're almost, yeah, pretty much at the lows.
what day did it make
What's
the most?
interesting about the ECB today? Everything that they came out with typically would be dovish, and bearish for the euro, but it's not. There's a real issue with the dollar, I think, right?
Yeah, and maybe Trump wants this. I'm not 100% sure, but maybe he wants this. I don't know why he would want this. He was always king dollar. Maybe he wants everyone to get out of dollars and buy Trump coin or something. I have no idea.
Why would he
But
want this?
I don't know. If he didn't want it, I believe it wouldn't be happening. Just my opinion. I don't think it would be happening. He would make concerted comments on the dollar. More of a concerted effort to
It
keep
could
the
be.
dollar stable.
It could
And I,
be. It could be they didn't foresee that the world would turn on the dollar so quickly.
yeah, well, I mean, does he want a weaker dollar? I mean, is that beneficial to him? Maybe. I mean, I don't know. I it doesn't feel good. It's funny. Nobody, even on this podcast or out there in the world, really cares whether or not the dollar is weak or strong. For the most part, the only time anyone cares is if they're traveling to another country, okay, and they have to convert their USD. Because the beauty of the US dollar is the dollar is the dollar, no matter what. It's worth a dollar is worth a dollar. It doesn't matter today if the dollar is weak, the dollar is strong, okay? But as the dollar gets weaker, the pricing power for inflation, because inflation is not only looked at in the United States, it's looked at across the world. So if their currencies are stronger, their pricing power becomes a lot, you know, more important. So, it's interesting to keep an eye on. Um, I think that the euro will pass 115 here. I don't know where
Yeah.
ultimately it goes. I'm looking to get long the dollar at some point, but we're sort of in no man's land. The yen against the dollar got down to 139 and some change, and it's 143, so it's not on the low. The euro is much closer to the low, and the British pound is as far as the
Check this
dollar.
chart out. Check this chart. I thought this was very interesting yesterday after the ISM number came out. The spread between the U.S. 10-year and the EU 10-year really dropped. I mean, our rates dropped, their rates stayed the same pretty much. Um, so you could see that blue line just kind of fall off the cliff there. That's kind of bullish for the euro. So, you're saying it's going to go above 115.
Maybe. I mean, listen, I don't know
I
where
mean,
it
I'm on
ultimately.
that trade. I'm on that trade.
Really,
Yeah.
I have not pulled the trigger on that trade, just because it's moving so slow, and we're at the top end of the band,
I
and
like that. It's good.
it's
Slow is
funny.
good.
It'll lead me away from currencies and into crude oil, which I've been a very active crude oil trader in my career, both in futures and in equities. And this is probably almost the longest time that I've gone without making a crude trade for my products, because I've been waiting for this breakout above 64 and a half, and it never happens. And then every time we get up to 64, we go down to 61, 62, and now we're back to 63. There's like a lot of this stuff is no trade. Something must have just come out. I see the S&P above 6,000.
There we
So
go. There we
I don't,
go.
I don't know what the comment is. I don't know if you could
Well,
see it anywhere.
I
It's got
hope
to
it
be.
rips. Let's go.
It's got to be some type of news, because we just flipped around. You're not seeing anything.
Yeah, this has got to be like a trade deal kind of thing, I think.
Trade deal? We're talking about trade deals now?
Yeah,
Mm,
let's see what the newswire is going to say.
Nah, I don't, dude. I
You
don't
have it
know.
or no? You have the news or no?
I do, but I don't see anything. I don't really want to kind of mess with my setup here only because I don't. Oh, here we go.
G. Trump hold phone talks.
Oh,
That's it.
oh my
That's
God!
it.
There it is.
They're gonna
Red
talk on the phone.
headline. Red headline. You better buy. They held talks. Amazing.
Oh my God, that is too funny.
It's such a fade. It's
So this is a
unbelievable.
great example. I mean, let's take a look at this chart of the Nasdaq. Actually, of the the Nasdaq. I'll pull up the Nasdaq. This is what we mean by like algos.
But what
So
is holding a trade talk? Everyone knew they were talking this week. Okay. They already came out with that. So they had a talk. Okay. What wouldn't it be better to come out and say what they talked about or the talk went well or the talk I
no,
mean,
they're holding phone talks. That's what the headline is. We don't know.
oh, I thought that but we already knew that. That's even worse. They didn't talk? I thought they talked. No? It said
It
they're
says hold phone talks. So
right, they held them. That means they
oh, they
talked.
held them already. Okay.
I
All right.
believe. I mean, everyone knew they were having them, so I don't know. The market is
So
ripping.
here's the spike. By the way, just from a technical trading, this is Nasdaq futures. Been a lot of volume over the last couple of days, relatively speaking, in the range where it just broke out of. So I would say this is what the algos do. No human bought this on the news. This was all robots. Now the question is going to be, uh, how do the humans react to the price spike?
The humans don't really play in this market, unfortunately. Very, very little. There's in my mind, the market is now made up of algorithms, hedge funds. Like when I had my hedge funds,
Yeah, but the humans have to like agree with the price, right? The algos react, and the
no, but
humans.
the human is now retail. That's the human. The human was never retail. The human was high net worth, very high net worth people that were entering the market and hedge funds. When my hedge fund was around, we had, we had $1 billion. We had power in the market. Now it's a literal joke. You could be run over by an army of retail getting together and maneuvering stocks. So really, the human element is there, but it's not in play the same way. And I think really, like what you're saying, the humans is retail. Now everybody has, you see what I'm holding up? I'm holding up this. Okay. Dude, stop writing a letter or whatever you're doing. Okay? Pay attention. I'm holding up this. Okay. And, people can trade right off their phone. When I started in the business, there was no retail, none, zero. The retail was high net worth institutional clients at the largest firms getting access to trade options. Other than that, it wasn't mom and pop. It wasn't some Hello Kitty in his underwear trading. It was really high net worth. Now everybody has access to this. My kids are trading on their phone like it's a video game. It's just a different market. So when you say human, it is human, but it's a different human. It's retail human. And then the hedge funds are still involved in a big way, but they sided. They used to listen pre GameStop and AMC. The hedge funds ran the show. If all the hedge funds would get together like a retail and they would buy or sell something, the stocks would move that way. And now they can't even beat the retail because the retail is so much bigger than them because the retail is billions and billions and billions of dollars. And you want to know something funny? I had an original position in Robinhood when it went public, pre-public. Okay. I don't know if you took a look at that stock yesterday. Did you take a look at it? Pull it up.
No, well,
Pull it up.
let's go. Hold on.
Good. All-time high. Why do you think it's at an all-time high? Because retail has gone ballistic and are trading like crazy, and you know basically are controlling the show. Here, pull it up. It's funny though. In April, they were blowing up. You gotta. It's the symbol. Pull it up.
Yeah, here it is.
Look at that. I mean, come
It's a nice
on.
move. That's a
Nice
nice move.
move. They were blowing up when the market was down in April. Literally, they thought it was the end of retail. Everybody held Bitcoin. It was at 75,000. Etc. And then now, bam, retail is trading like crazy. So it's this is a really good indication. It's probably the best indication of of the retail sentiment, right? I mean, what else
Um,
is better?
maybe it's also the fact that there's going to be a lot of trading going forward, a lot. And Robinhood, yeah, I mean they have a
Well,
lot
why do you
of
think there's a lot of trading
innovation.
going
They have
forward? I think
24/7. They have 20. They're trying to innovate a lot. I think. I think deregulation in crypto could help them eventually. But
Eric,
there's
but
other
they're
stocks
come
like
on, they're a firm that is only catering to retail. It's not, listen, people have Ameritrade accounts, they have IB accounts, they have accounts everywhere. The reason why this thing, first of all, I'll tell you honestly, the app is incredible. Okay? Incredible. I mean, their app is really, really good. It's impressive. I haven't
But
traded on.
they're the type of brokerage that could infiltrate institutional too. You can't trade Nvidia at 2 o'clock in the morning anywhere except Robinhood.
That's definitely not true.
Where
That's
can you trade it?
definitely not traded any. IB has it all night long. There are many firms that offer it
Oh,
all night long. Yeah, IB trades it all night. But there are others. But no, they're the most innovative in that sense. But it's pure retail. It's pure. I don't want to insult anyone, but it's like a lot of amateurs that are becoming market mavens. Which, listen, in a bull market, it's a
speaking of brokerages, this one I like too. I like all of these brokerages. MKTX, Market Access. This one's like way under the radar, but I think like Robinhood, they're going to outperform. There's going to be a ton of volume everywhere. This one trades bonds all over the world. Market access, a lot of people don't know, but this is one that was outperforming while everything else was kind of tobogganing down, and looks like in a good technical spot. So yeah, I like that basket. Robinhood, this one, market access. You could even throw Coinbase in there. I mean, take a look at Coinbase. Just recently
yeah,
added to the S&P 500.
yeah, but it's come in a little. It's not, it's had a rally up and consolidated. But listen, but let me ask you this, and I've been in the business a really long time, okay? And I've seen brokerage go almost out of business multiple times, okay? In bad environments. I mean, this is to me, this is just a retail frenzy, and people are able to get rich on different stocks almost on a daily basis. And that to me is very speculative. It could, you know, it could, it could say, and it's funny. I'm reading the Trump G headline. It's not even coming out of the White House. It's coming out of some media source. So who knows? You know what I'm saying? And Trump's going to be like, we had big, beautiful talks. Everything is beautiful. We're about ready to sign a deal. They haven't even gotten to phase one. They're not even at phase one. They're at phase zero, dude. Like, I don't even know. Like, these algos, you're like, look at the market now. It's back to almost where it was before the thing came out. Like, it's ridiculous. It's honestly ridiculous. And this is, listen, it's kind of, you got to sift through it and you got to wait. But it's kind of angering that these algos or these retail guys, They don't care. They're going to blow the same way they blew up in GameStop and AMC. Only the really early guys and the smart guys made money there. The money lost in those stocks is epic, dude. Epic. So, they ran the hedge funds out of town. you know, Kudos to that. But they are now sitting for years and years and years in these stocks, and they're not really doing anything, and they're garbage. And now they're rotating out of that into something else. So, listen, I think it's a very retail driven market. I think it's the algos have learned how to do this where they run in front of the retail public. Listen, if you're trading on Robinhood for people out there, I just want you to know they're selling your order flow, okay, to another firm, Citadel or Jane Street. Okay, so you think you're trading for free, but you're paying a toll to enter every single trade. So be very aware of that. And I think people are not aware of that their order flow is being sold in the market, meaning like if I go to buy Apple through my Robinhood account, that order doesn't get what is called best execution. Okay. It should be getting it, but it doesn't. It routes to a firm and they execute your order, which may or may not be best execution. In all the businesses that I have an obligation to my customers, okay, people that are with me, to get best execution, okay? And we have to prove it out, okay? But these firms don't have to do that. So you're just be careful out there for people that are watching. Just remember that your orders are being sold. I would ask your broker if they're selling your order flow. Okay, it's important to know. And that's a toll. And that toll, believe it or not, is more than commissions. It's way more than the commissions that you're paying. So be aware of that. Again, I think Robinhood's front end looks really, really good, but I believe they're selling your order flow to Citadel or Jane Street. And I think it's important for you to know that because that is a tax on your account. We've been talking a while. I think we talked about a lot of good stuff here today, but again, let's just look at the markets. Again, we had the Xi talking to Trump news ran us, originally 30 handles. Now we're up 14. I think it will fade off that news into tomorrow. But again, the market to me, I've seen this over the last 2 to 3 weeks, has an inherent bid in it. It just wants to go higher. Bad news, we don't go down, and good news, we go much higher. I think retail is heavily invested in this market right now. So just, be a little bit careful. And we're up at levels that are, near all time highs. And, bonds are basically at 435. If the number comes in weak, maybe we can rally another 10 basis points, but you're risking a lot of supply coming in the market and no foreign countries buying our bonds. So I think that's why our rates are high. And, dollar's not ready to break out yet. Currency's against the dollar, but it's getting close. So we'll monitor that as well as crude.
By the way, Larry, I just want to backtrack a little bit. We were talking about Robinhood. Robinhood might enter the S&P 500. So we're going to get an announcement tomorrow, I think, after the bell, after the market closes, on what's coming in to the S&P. Robinhood's on the list. Another brokerage, Interactive Brokers, is on the list.
But
And my favorite, Cheniere Energy, LNG, which I'm rooting for.
It's
You
funny.
know,
I've traded Cheniere before you were born. I call it Cheniere. What do you call it? Cheniere?
I just I just call it LNG.
So yeah, I mean, listen, Robinhood probably should be in the S&P. It's got almost $100 billion valuation. I
So
mean,
there's a list of stocks that could potentially come in. Robinhood's on that list. Carvana's on the list. Apple,
there's a good one, Carvana. I mean,
Carvana,
buy
uh,
now, pay never. It's
Interactive Brokers.
buy now, pay never. But we'll see how what happens with that. I want to get kind of close to wrapping here because we have probably actually we have 20 minutes, so we could talk more if you seeing anything else. I'm just waiting on the unemployment number.
Well, how are you handling? I mean, the unemployment number is tomorrow. How are you going to handle today?
Today, I'm gonna basically sit tight. Maybe sell an upside call spread here if we open up here. I got to look at the pricing. Um, had a good one yesterday, but overall, the trading has not been great for me over the last couple of weeks for sure. So we want to just, chop, cut back on our trading and chop back the P&L. That's what we've done for my entire career, and we'll continue to do that. So, I mean, maybe an upside call spread, but I have to see the pricing. That would be a zero DTE, credit spread on the calls for today. Other than that, I'm not really seeing a lot. We reacted somehow to, I mean, it's actually kind of crazy. I'm telling you, there was a call set up between Trump and Xi already, okay, for this week. Came out over the weekend that they're going to talk this week. So then they talk. No one knows what they talked about, how it went, and what the story is. And the market rallies 30 handles on that. So, it's given back half. But we see
I,
this a
I know
lot.
the market's reacting to all this, but a lot of negative narratives have kind of been broken here. CPI is down to two. I don't know if it's CPI, but we had an inflation report saying 2.1% last week, which is basically
No,
the Fed's target. Yeah, yeah, and
no, no. We're not at 2.1 on inflation. Not a
look,
chance. I
Barron's
mean,
came out
maybe it,
with the Fed
maybe it,
survey. 75% of companies have already raised prices in response to tariffs. So where's the
okay. So then
inflation?
how could the rate be coming down if 75%? I mean, come on, yeah. I went to Syracuse, which I love the place. It's a great university. All right, but I'm smart enough to know if 75% of companies raise rates, how is inflation coming down? Okay, okay. If you could, we're gonna actually save that one for the next podcast. How is inflation coming down if 75% of companies raise prices?
And look, and the market has been coming up, so maybe the effect of the tariffs isn't what everybody thought it was going to be.
But you're just saying prices are going up.
Well, they
So
already raised it, and even though they raised it, the inflation rate is still down to 2.1%. Now, is it accounting for the full length of time tariffs have been on?
dude, what is 2.1%? One part of a PCE number or something? I mean, it's not a CPI number. It's not, you
The
know.
headline number the Fed is going off of.
I
So
doubt it. Then why aren't they cutting rates? Makes no sense. They
why would
they're
they
at
cut
their
rates
target.
with the market?
Wait, time out. They need
They're not going to
2.0.
cut rates
They
this
need
year. I don't think
2.0 and then they'll do it. I mean, come on. It's ridiculous. We're not
they're.
even near that number. Okay, but whatever. Okay. We'll give them 2.1. So then the better question of the day is why is the Fed not cutting rates? You got slower growth. That is a guarantee.
The
You're
market
seeing
is
it.
pricing in one 25 basis point cut by September meeting. By the September meeting, I don't think we get there. I mean, why would they cut
Why?
rates?
You're saying if inflation is 2.1, why wouldn't they cut? You got slower growth. You're going to have a horrible,
Do
I think
you?
you're going to
I
have a much
mean,
weaker
okay,
number tomorrow. So I don't know.
let's see. Let's see. I don't.
And why would the 10-year be trading at 440 or 435? I mean, wouldn't it be in the threes? So, something doesn't seem right. So I don't think
Well,
your
that's the
inflation.
fact that there's some sort of de-dollarization going on, and people are not re-upping on their treasuries globally. That's what's keeping our rates high. So that's a different reason why rates would be higher. So
Well, let
inflation
me
is
ask
just
you
one part
this.
of
So
it.
we're not going to be on
There's
the
no
air.
demand for our treasuries. That's the problem.
Well, here's what we're going to do. We're going to end the podcast like this. And I really like this because we're going on a record right now. Okay. All right. Here we go. I know you don't like to go on the record so
I
that we
love
can
going
kill
on the
the
record.
film. Okay. Here's how we're ending it. Tomorrow's number. Okay. They're looking for, all right. The survey's looking for non-farm payroll of 126,000 jobs. Okay. I want you to tell me what your prediction is for non-farm. Okay. And what you think the market's going to do.
Okay.
Quick question.
I think we're gonna beat the number.
You think we're coming in higher than
Yeah,
126?
I think we're gonna beat the number.
Okay. Okay. And then
I
what is
think,
the market going to do?
and I think the market goes up regardless of what happens, even if the number is bad or good.
Okay. So I'm going with a
Now, it
number.
doesn't matter. Just for the record, anybody watching, right? And a lot of my son's little friends are watching, right? And they're
Uh-oh, they
trying to
could be
learn the
in they
market
could
from
be
me.
in school, Eric. What are they doing? Cutting school to
They
watch
love to
our
watch the
podcast?
podcast. I don't know why, but they love it.
So I'm going out with
Okay, go
I'm
ahead.
gonna I really want to go out with this, okay? But I think there's a very good possibility of zero to negative job creation for the month. But I'm going with 40,000
Okay.
non-farm payroll at 40,000, and I think the market's going to sell off that. That's what I'm going with. So
All right.
that's our predictions. You think up either way, okay? And you think
Yeah,
we're going to see it.
I think
Time
up, but
out.
from a trading point of view, are you taking positions into that number?
No. I
No.
mean, I had no. I should. Yes, I am short. Okay, it hasn't been fun. I remain short, not adding to positions, waiting it out. I have till August. We're suffering decay on options. But remember, everyone watching out there, you're only going to lose if we lose the amount invested. So invest less, have the ability to stay longer. But here's what I'm saying. I'm saying that jobs are going to be weaker, and the market is going to actually sell off of that. Because it's going to be much, much weaker. So you have up either way, and you think it's going to be higher than
Yeah,
120.
I think everybody's narrative has been destroyed this year when it comes to tariffs completely and utterly. So why not this one too?
Well, what do you mean? Tariffs are out of the picture. They're not even they tariffs actually act as a
Tariffs
positive
were
for the
supposed to be
market.
the end of the world. The market has come right back. All the economic indicators have come right back.
But how does your world end in a month?
Everybody's looking at one side of the equation. Oh, tariffs are going to cause inflation. Maybe they're not. Maybe they're missing the demand side of it too. So I think the consensus is bearish here and has been actually. That's the
No.
consensus view.
I,
Sentiment is almost at an all-time low.
all right. Well, listen, we're gonna wrap. Everybody has our opinions on the record, and we'll see tomorrow. We will be coming on exactly when they release the numbers. So a lot to talk about tomorrow. Today, quiet overall. Get your rest, and we'll be back tomorrow. Everyone enjoy. Have a great trading day. Peace.